Welcome to Talk Tickers, your deep dive into the most compelling earnings calls. Today, we're unpacking the latest results from Intea Fastigheter. Now, for those new to Intea, they're a Sweden-based landlord, but with a very specific focus.
Right, the public sector social infrastructure properties.
Exactly. Think prisons, police facilities, specialized healthcare buildings. It really gives them an interesting market position, doesn't it?
It certainly does. And their Q2 results for FY25, they came out pre-market on July 11th. And, well, they definitely provided plenty to discuss.
Yeah.
Especially because the overall mood in that Swedish social infrastructure REIT sector has been a bit firmer lately.
Okay.
You know, after several quarters where investors were pretty anxious about discounts to NAV.
Right, the net asset value gap.
Exactly. So this call landed at a really pivotal moment.
Okay, let's get into it then. A snapshot of their Q2 performance. It sounds like it was, well, pretty positive.
Yeah, quite a positive surprise, actually. A modest beat on expectations, but strong underlying numbers.
We saw rental income revenue climb, what was it, 24% year on year, up to SEK 361 million.
Pretty impressive jump.
And property management profits surged even more dramatically, up 67% to SEK 207 million.
Huge increase there.
That strong showing also fed into operating margins, right? An expansion of 250 basis points.
Yeah, 2.5 percentage points, largely driven by new projects coming online, the ones they completed recently.
Okay.
And what's fascinating here, I think, is that management specifically pointed out these figures were ahead of their internal budgets.
Okay.
Now, this is a thinly covered stock. There's no real formal consensus estimate out there.
Right.
So them saying we beat our own numbers really underlines the strength of the quarter. It points to a robust cash flow run rate.
Got it. So digging deeper now into the financials that really powered this, that big profit growth you mentioned, the new projects, primarily fueled by income from things completed through 2024 and early 2025.
Yeah, projects like the Viscaym prison, that optometry clinic, and Lynn Shopping.
Right. And they also had some extra rental income from acquisitions they made back in Q4 last year.
Exactly. And if you connect that to the bigger picture, the balance sheet looks a lot healthier too.
How so?
Well, they had that SEK 1.1 billion directed share issue back in May.
Okay.
And also tapped a green bond for another SEK 500 million.
Adding to an existing one.
Precisely. And those moves were critical. They really eased the refinancing worries that were kind of hanging over the company in 2024.
Makes sense. Now, it wasn't all positive on the value changes front, was it?
No, that's true.
They had a positive SEK 143 million from changes in investment property values, but
the negative hit of SEK 286 million from changes in the value of their interest rate swaps.
oof. And a write-down on hydropower plants too, SEK 70 million.
Yeah, they took that as well.
So here's the question then. Why did the market seem to just shrug off those negative derivative numbers?
Yeah, it's a great question. And I think it really comes down to conviction.
Conviction in what?
Conviction in the tenants. The market seems convinced that having the government, essentially as your main tenant, provides this huge insulation from rate volatility.
So the underlying income stream is seen as super secure.
Exactly. So those swap fluctuations become, well, less worrying in the grand scheme of things for the investment case.
Interesting. Okay, let's pivot to what management was saying. CEO Sharlata Walman-Hurland.
Yeah.
She reiterated their long-term targets.
She did. Still aiming for that 12% NAV and earnings growth over the long haul.
Right.
But what really stood out to me was the clear signal about acquisitions.
They're feeling ready to shop again.
Definitely. Now that the balance sheet is, materially stronger, they seem quite keen to look for opportunities.
Makes sense. Capitalize on their niche.
Precisely. It positions them really well.
And they haven't wasted any time. That big acquisition announcement, the security properties portfolio from Special.
Yeah, that was significant.
7 prisons and 4 CIS institutions. That's over 78,000 square meters.
Huge footprint. And the tenants are the Swedish Prison and Probation Service, the National Board of Institutional Care.
Rock solid tenants.
Absolutely. And that deal adds over SEK 190 million in annual rental value.
Wow. And it takes their prison count from 5 up to 12, owned or developed.
It really does. And it just perfectly highlights their whole business model, doesn't it?
That's stability focus.
Yeah, focusing on these long-term public sector tenants. It just provides such a solid foundation, especially, when things feel uncertain elsewhere.
It's a classic defensive play.
And it keeps working for them. It really does.
Okay, what about the development pipeline? Still looking strong.
Oh, very robust and accelerating, actually. In Q2 alone, they added almost SEK 6.5 billion in new projects.
6.5 billion.
Yep. And those are expected to contribute around SEK 480 million in annual rental value once done.
Okay.
And if you look at the year so far, since the start of 2025, that jumps to SEK 11.3 billion in project volume, with an estimated SEK 820 million in annual rental value. These are projects in Java, Linköping, Vest, set for completion out between 2026 and 2031.
So real long-term visibility there.
Absolutely. That sustained focus on developing for public sector tenants is key. The total project portfolio now, it's SEK 12.8 billion.
Wow.
And they estimate that'll bring in an additional, SEK 870 million in net operating income. That's a 59% uplift in rental income potential.
So upon completion, total rental value around SEK 2.5 billion.
Roughly, yeah. An increase of over SEK 900 million from today. That's a powerful growth trajectory they're building.
They also flagged a completion, didn't they? That eye clinic in Linkping.
They did, yeah. The Gamganashan area project finished in May.
Part of a strategic densification effort, is that right?
Mm-hmm. Building more on land they already have influence over. It's got specialized surgical areas, patient areas.
And on a long lease.
15-year lease, generating about SEK 20 million a year in rent.
And it's the first time that tenant, Greenland, has used an external landlord for something like this.
That's what they highlighted, yeah. Kind of interesting. Shows Intea's capability.
And potential for more there, too, with new zoning rights.
Exactly. An extra 66,400 square meters of building rights. So future expansion is definitely on the cards.
It really demonstrates how they can develop their existing sites and meet those really specific tenant needs.
Absolutely. It deepens those relationships, makes them more of a partner than just a landlord in that public sector ecosystem.
Okay, shifting back to the overall financial health. First half of 2025, contracted rent SEK 1.5 billion.
Correct. And property value sitting at SEK 25.3 billion. That gives a yield of about 5.5%.
And cash flow still strong.
Surplus ratio.
Very strong. Surplus ratio at 83.8%. High cash flow from operations.
And the key debt metrics, LTV.
Loan to value, 46.8%.
So comfortably below their target range.
Yeah, target's 50-55%, max 60%, so they're well within that. Good buffer.
Interest coverage ratio. ICR for the last 12 months is 2.9 times. Corporate ICR is 3.5 times. So plenty of profit covering those interest payments. Shows a robust ability to service their debt.
And it sounds like they've been pretty active managing that debt.
Very proactive. Yeah, that's a clear theme.
Executing interest rate swaps.
Mm-hmm. SEK 3.5 billion in new swaps at an average rate of 2.4%.
Nice rate.
Yeah. And they also extended existing swaps, another SEK 1 billion, pushing out their fixed rate period to 4.9 years on average.
Okay.
So their total swaps now amount to SEK 13.8 billion. And the hedging rate is actually 113%.
Over 100%. So they've hedged more than their current debt.
A little bit more, yeah. Provides an extra cushion against rising rates. Very disciplined approach to managing that interest rate risk and securing long-term funding.
Which is pretty crucial right now.
Absolutely. And they also hit the bond market again in Q2. 2 new green bonds totaling SEK 950 million.
Okay.
Further diversifies their debt, extends the tenors. Again, all about that long-term stability.
Now, a really key differentiator you mentioned is the tenants. Public sector focus.
Yes.
They actually exceeded their goal there, didn't they? Over 90%.
They did. They hit 96.5% of rental income from public sector tenants this quarter.
Up from 95.7% at the end of last year.
Mm-hmm. And the average lease term with those public tenants also ticked up to 8.1 years now.
So let's ask the question for you, the listener. What does that level of public sector concentration actually mean for the company's resilience?
Well, it means highly predictable cash flows, very predictable,
right.
Minimal vacancy risk. The government isn't likely to just disappear or go bankrupt.
Sure.
And that delivers exceptional stability. And clearly, the market is rewarding that right now. It really sets them apart.
Okay, so bringing it all together for the investor context, what does this all mean if you're watching the market? Intea's strong Q2, especially how they navigated those derivative value changes, it sounds like it really resonated.
Oh, definitely. You saw it in the stock reaction. The B share popped, 4.7% on the day of the results, July 11th?
Yeah, closing at SEK 80.4.
And volumes were up too, roughly 1.8 times the 3-month average. So clear interest.
And it wasn't just Inti moving, right? Peers like Wallenstam, Castellum.
They saw gains too, yeah. It underscores that broader, firmer tone we talked about across these Swedish social infrastructure REITs. It feels like investors are moving past those prior worries about NAV discounts.
Right, a sector-wide shift perhaps.
Could be. And you have to remember, Intea's stock was already up nearly 70% year to date before this.
Wow, quite a run.
A huge rebound, yeah. Largely helped by those capital raises back in May, strengthening the balance sheet.
Seems like a clear vote of confidence from the market.
I think so. It really signals that the market is increasingly appreciating those defensive qualities, that consistent growth potential you get with government-backed income streams.
It makes Intea a really compelling case study for finding stability in real estate, doesn't it?
Especially compared to some of the more volatile commercial segments right now.
Absolutely. Okay. As always, our final segment is strictly for intellectual curiosity. This is not financial advice.
Definitely not.
These are just ideas to spark your thinking, maybe challenge some assumptions. Don't go implementing them directly.
Please don't. So given Intea's, unique stability and how the market seems to be warming up again to these government-backed assets, here's an audacious idea.
Okay, let's hear it.
You could consider a long position in Intea B shares, but pair it.
Pair with what? A short?
Yeah, pair it with a short position in a, let's say, more traditional Swedish commercial property REIT, one that's highly leveraged and doesn't have Intea's public sector safety net.
So playing the divergence.
Exactly. The play here isn't just a simple long short based on, current price. It's more of a conviction call.
A call on what?
On the idea that the market will continue to pay a premium, maybe an increasing premium, for that stability and predictable cash flow, especially if the broader macro environment stays uncertain.
So you're betting on a widening gap in valuation multiples between the stable players and the more exposed ones.
Precisely. Exploiting that potential divergence as the market hopefully re-rates those defensive income streams upwards, it's a bet on the flight to quality, essentially.
Interesting. Definitely audacious, as you said.
Food for thought.
Okay, let's wrap this up then. Intea Fastigheter delivered a really robust Q2.
Strong revenue, strong profit growth.
Driven by those new projects coming online and the strategic acquisitions, like the prisons.
Yeah. And that strengthened balance sheet really positions them well for more expansion in their niche.
That stable public sector niche.
And what's really crucial here, I think, is seeing how that focus on government tenants acts as a genuine hedge against wider market swings.
Yeah, it's a characteristic investors are clearly valuing right now.
Definitely shows the power of a very focused defensive strategy.
So the final thought for you to ponder. Does Intea's success, this focus on things like prisons and government buildings, does it challenge your own assumptions about what makes an asset truly defensive in today's volatile market?
Is stability sometimes found in the less glamorous corners?
Something to think about. That's all for this deep dive. Thank you for joining us on Talk Tickers. Remember, everything discussed here is for informational purposes only. It is absolutely not financial advice.
Please do your own research.
Always do your own research, and maybe consult with a financial professional. We'd love to hear your thoughts on Intea's results, though. Feel free to reach out.